Bangladesh is a country that not so long ago few considered an economic giant. But today, as companies are leaving China en masse, the country is becoming a key player in global manufacturing. Bangladesh's economic growth is staggering, and many are asking the question, could it become the new China? Why are manufacturers choosing Bangladesh? How is the country coping with the challenges and what prospects lie ahead? You're on the channel Simple Economics. Subscribe, and here we go. Bangladesh gained independence in 1971 after a 9-month war with Pakistan in which hundreds of thousands of people died. The country's economy was devastated and infrastructure was almost non-existent. At the time, GDP per capita was only about $100 a year, making Bangladesh one of the poorest countries in the world. More than half of the adult population was illiterate, and homelessness and poverty rates were off the charts. One of the worst disasters was a pre-independence disaster, the 1970 Pola cyclone. It was the deadliest cyclone in history, killing about 300,000 people and destroying vast agricultural areas on which most of the population depended. Recovering from this tragedy was another heavy burden for the new country. At the start of its independent existence, Bangladesh faced natural disasters, poverty, and almost no industry. In 1972, after the war, GDP per capita fell to critical levels of about $93. International aid and the first economic reforms laid the groundwork for further change. But at that point, the country's future seemed highly uncertain. Despite its difficult starting conditions, Bangladesh started to show significant economic growth from the 1990s. At the beginning of this period, GDP per capita was still low at around $300, but by 2020, this figure had risen to over $2,000. This impressive growth was possible due to reforms aimed at developing industry and improving the quality of life. One of the main drivers of growth has been the improvement in living standards and a significant increase in life expectancy. The average life expectancy was around 46 years. By 2020, this has risen to 72 years. This has been achieved through improved healthcare, especially in combating child mortality and communicable diseases. Bangladesh has also made significant strides in education. In the 1980s, more than 50% of the adult population was illiterate. In 2020, adult literacy has reached 75%. Giving women access to education and jobs has been particularly important, greatly increasing women's participation in the country's economy. Credit for the poor has been another key tool for improving living standards. The microcredit program, founded by Nobel laureate Muhammad Yunus, gave poor families the opportunity to start their own businesses. As a result, millions of people have been able to escape extreme poverty. And in 2018, the poverty rate fell from more than 40% in the 1990s to 20%. A key factor in Bangladesh's economic success was the smart use of its resources, chief among them cheap labor. With the rising cost of labor in China, many companies began looking for new locations for production. Bangladesh, with its low wages and rapidly developing infrastructure, was a great alternative. For example, well-known brands such as H&M and Zara moved significant amounts of their production to Bangladesh, which contributed to the rapid growth of the textile sector. An important milestone for the economy was the introduction of the garment industry. In the 1980s, Bangladesh aggressively developed this sector, and by 2020, the country was the second largest garment exporter in the world, second only to China. The sector not only provided millions of jobs, but also allowed women to enter the country's economy, an important step in changing the social landscape. Today, women make up about 80% of the workforce in the textile industry. Another important driver has been the number of Bangladeshi nationals working abroad. The diaspora plays a huge role in the country's economy. In 2022, remittances from migrant workers exceeded $20 billion, accounting for more than 6% of the country's GDP. These funds not only help support migrant families, but also help to boost foreign exchange reserves and stabilize the economy. The use of cheap labor, the development of the garment industry, and the contribution of the diaspora have been the key drivers that have helped Bangladesh emerge and gain a meaningful place in the global economy. Exports have become the main engine of growth of Bangladesh's economy. The main export item is, of course, the textile industry. Today, more than 80% of the country's total exports are garments, which are exported to markets in the US, Europe, and other developed countries. In 2021, textile exports totaled more than $34 billion. This success would not have been possible without active government support. One of the most important tools was the policy of stimulating export companies through cheap loans. Local producers were given access to concessional loans, which allowed them to expand production and improve product quality. This approach allowed Bangladesh to remain competitive in the global market despite increasing competition from other Southeast Asian countries, such as Vietnam. Textile exports have not only become a source of foreign exchange earnings, but have also provided millions of jobs, especially for women. This dynamic has boosted economic growth and improved living standards. In addition, the development of export industries has stimulated the growth of other sectors of the economy, such as transportation, logistics, and finance. Thus, garment exports have been the backbone of Bangladesh's economic miracle. But to sustain this success, the country will have to look for ways to diversify its economy. But why have global companies and clothing brands started moving their production out of China? We are now witnessing a massive shift of manufacturing capacity from China to other developing countries. Bangladesh has been among the major beneficiaries of this process, and there are several key reasons why companies have started to leave China. The first and most obvious reason is the rising cost of labor in China. While China was known for its low wages in the early 2000s, by the 2020s, the average wage of a Chinese worker has risen to over $900 per month. In Bangladesh, by comparison, workers in textile factories earn about $120 a month. This labor cost gap makes Bangladesh an attractive alternative for companies looking to cut costs. A second important reason is the COVID-19 pandemic, which has shown the vulnerability of global supply chains that rely heavily on China. In 2020, when many Chinese factories were forced to stop production, it caused huge supply disruptions around the world. As a result, many companies have started to diversify their supply chains, moving production to other countries to avoid dependence on one region. The third reason is the desire for diversification and risk reduction. Global companies have realized that concentrating production in one place, even if it is a powerful economy like China, carries serious risks. Bangladesh, with its low labor costs, stable economic policies, and growing infrastructure, was a logical choice to shift some production. Thus, rising wages in China, the impact of the pandemic, and the need to diversify production were the main factors that pushed global companies to look for new markets for their production facilities. Bangladesh was one of the countries ready to seize the opportunity and take a place in the global manufacturing arena. Despite its impressive economic achievements, Bangladesh faces a number of serious problems and challenges that could slow down its future growth. The first problem is the lack of diversification of the economy. Although garment exports are the main engine of growth, this heavy reliance on a single sector makes the economy vulnerable. Any disruptions in the global textile industry could deal a major blow to the country's revenue. For example, Bangladesh's exports fell by 18% in 2020 due to the pandemic and lower global demand for apparel, showing the weakness of such a model. The second problem is cheap labor, which is still the country's main competitive advantage. However, if Bangladesh does not invest in upgrading the skills of its workers in developing other sectors, the country may be trapped in a low-income trap. Continued dependence on low-wage labor may limit the possibility of improving living standards for the general population. The third problem is duty-free terms of trade. Bangladesh now enjoys a number of favorable trade agreements with Europe and other developed countries, which allows its products to be competitive in the global market. However, economy grows and approaches middle-income status, these incentives may disappear. This would put serious pressure on export industries and require a review of economic policy. The fourth challenge is competition with other countries in the region, such as Vietnam and Cambodia. These countries offer similar conditions for foreign investors, and Vietnam already has a strong position in the textile and electronics industries. Bangladesh has to compete for investment, and this requires creating a more attractive business environment and improving infrastructure. Bangladesh also faces a population density that is one of the highest in the world. The current population density is about 1,265 people per square kilometer, which is almost 9 times higher than China's population density of about 153 people per square kilometer. This poses huge challenges for infrastructure development, access to medical services and education, urban congestion, constant traffic congestion, Air pollution and housing shortages also reduce the quality of life and jeopardize the country's long-term development. As you already know, Bangladeshi diaspora is not only spread within Bangladesh itself, but also millions of Bangladeshis live abroad and send remittances to their families. And these remittances from abroad have more than just a short-term effect. They contribute to the growth of the domestic market. Families receiving funds from relatives abroad increase consumption in local markets, which stimulates the development of small and medium-sized businesses. As a result, there is an increase in demand for goods and services, which helps to create new jobs and improve infrastructure. Low debt levels of local companies also play an important role in the domestic market. Unlike Western corporations, which often rely on credit for growth, many Bangladeshi companies manage their finances carefully, avoiding excessive debt. This allows businesses in the country to be more resilient to financial crises and reduces the likelihood of mass bankruptcies. This gives Bangladesh an important competitive advantage, especially against the backdrop of global economic instability. Thus, the role of diaspora and domestic resources is of great importance to Bangladesh's economy, providing stability and promoting development at both household and enterprise levels. These factors help to support the sustainable economic growth of the country. Bangladesh has already made significant strides in the textile industry, but for long-term growth, the country must diversify its economy. One of the key areas for this is the development of new industries such as pharmaceuticals and information technology. Bangladesh's pharmaceutical industry has shown strong growth since the early 2000s. Today, the country is the second largest producer of pharmaceuticals in South Asia, second only to India. In 2021, pharmaceutical exports totaled more than $169 million. Bangladeshi companies produce a wide range of generic drugs, which has given them an important position in the global market, especially in emerging economies. An important success factor has been the removal of patents on a number of drugs in accordance with World Trade Organization rules, enabling Bangladesh to produce and export drugs at lower prices. Another promising sector is information technology. The IT industry has grown rapidly over the past few years due to government investment and increasing demand for outsourcing of IT services. Bangladesh's IT exports exceeded $1 billion in 2022, and the country is looking to increase this figure in the coming years. One of the most successful areas is outsourcing of programming and customer service. Due to cheap and relatively skilled labor, Bangladesh is becoming attractive to international companies that outsource part of their operations to the country. The government is actively supporting this sector by creating special economic zones and offering incentives to IT companies. For these new industries to continue to grow, Bangladesh needs to invest in education and the development of a skilled workforce. The country has already started to increase funding for universities and training centers, specializing in pharmaceuticals and IT, training the next generation of professionals who will drive the economy forward. Thus, the pharmaceutical and IT sectors offer new opportunities for Bangladesh. If the country can capitalize on these prospects, it will enable it to reduce its dependence on the textile industry and make the economy more resilient in the face of global change. Despite the prospects of growth and diversification of the economy, Bangladesh is facing a number of challenges that are constraining its further development. One of the main challenges is the lack of foreign investment. Although the country has attracted significant investment in the textile industry, other sectors such as pharmaceuticals and IT are still underfunded. The reasons for this are political instability, corruption problems, and underdeveloped infrastructure. According to the World Bank, Bangladesh's corruption perception index remains high, and this seriously discourages foreign investors. In addition, problems with bureaucracy and weak protection of property rights also limit business opportunities. Infrastructure constraints are another problem. Although the government is actively investing in improving roads, ports, and power grids, this is still not enough to support rapid economic growth. According to a World Economic Forum report, Bangladesh ranks only 105th in the world in terms of infrastructure quality. Congested roads, regular power outages, and an outdated logistics system create barriers to business and increase costs for companies operating in the country. Population density is an equally important issue. With over 1,265 people per square kilometer, Bangladesh remains one of the most densely populated countries in the world. This density puts enormous pressure on natural resources and urban infrastructure. Unlike China, which has a population density of about 153 people per square kilometer. Bangladesh has to cope with a serious housing shortage, overburdened schools and hospitals, which reduces the quality of life and limits long-term growth opportunities. Climate change is another significant challenge. Bangladesh is extremely vulnerable to floods and other natural disasters due to its geographical location. Sea levels continue to rise, threatening coastal areas where about 20% of the population lives. Economic losses from these events can have a devastating impact on agriculture and infrastructure, making it difficult for the country to develop sustainably. In order for Bangladesh to continue its economic growth path and improve the living standards of its citizens, the country needs to take several key steps. First, diversifying the economy is a critical area. Bangladesh needs to move beyond textiles and develop other sectors such as pharmaceuticals, IT, and value-added agriculture. Increasing exports in these sectors will reduce dependence on textiles and make the economy more resilient to external shocks. The government is already investing in the pharmaceuticals and IT sectors, but to achieve significant results, it is necessary to increase funding for research and development and attract more foreign investors in these sectors. Second, investment in education and vocational training should be prioritized. Although adult literacy in the country has reached 75%, the quality of education still leaves much to be desired. Bangladesh needs to train highly skilled professionals capable of working in new industries. Investing in STEM education, science, technology, engineering, and math will help create high value-added jobs and make Bangladesh more attractive to international companies looking for skilled labor. Third, the country needs to improve the investment climate. For this purpose, it is important to fight corruption, reduce bureaucratic barriers, and strengthen the protection of property rights. Attracting foreign direct investment, FDI, will be crucial for modernizing infrastructure and developing new sectors. Examples from countries such as Vietnam have shown that actively working to improve the business environment can lead to a significant increase in investment and job creation. In addition, Bangladesh needs to invest in infrastructure, improving transport networks, modernizing ports and airports, and building new facilities for energy supply are key to boosting economic growth. It is estimated that the country will need to invest at least $35 billion over the next few years to modernize its infrastructure. Without this, the economy will face limitations in its ability to expand further. Finally, Bangladesh must proactively respond to climate change. Investing in coastal protection projects, building flood protection systems, and developing sustainable agricultural technologies will help the country minimize economic losses from natural disasters. Those measures would preserve populated areas and agricultural land, which accounted for a large share of food production. Bangladesh has traveled an incredible path from poverty and destruction to economic success. But its story does not end there. There are important challenges and opportunities ahead, and the country's future depends on how it deals with them. Simple Economics has been with you. Subscribe to the channel not to miss new videos. See you soon.